Hi, it's Nero here from Investment Rise, and if you're someone who's trying to work out where's the best place to invest in 2022 to get both positive cash flow and strong capital growth prospects, then what I have to share today is for you. In particular, what I'm going to be doing is I'm going to be going through the entire country, all of our capital cities, looking at the capital growth that the housing market has. I mean, if you've followed my work for any length of time, you know that I will strongly advise staying away from apartments for most investors. Remember, what I have to share today isn't advice. It's just general in nature. And it's based really on my research and my opinion. But I would advise staying away from the unit market. So that's why we're going to be focusing on houses. I'm going to share percentage growth. I'm going to share growth in rental returns. I'm going to share median prices, median rental returns, and also then which capital cities are showing an upturn in the rate of growth and which capital cities are showing a downturn. Right, so we have a lot of data to share today, and I really hope that by the end you've got a clear sense of what's happening in the market as we begin 2022 so that it can then help dictate your research and where you choose to invest. So let's get started. So what I've done here is I've looked at the house price growth across the country and the rental price growth, and then looked at what your money will actually get you here. Okay, so what you can see in Sydney had house price growth in 2021 of 25.27%. Okay, the rental market grew at 9.1%. Melbourne, 15.1% house price growth, but only 1.1% growth in the rental market. Okay, and so that's why if you've seen any of my past episodes, I've shared how if you're looking to find property that gives you both strong capital growth and positive cash flow, I don't see a lot of options in the Melbourne market. Okay, and a big reason why we want to see growth in both capital and rent, okay, is because we want you to preserve your borrowing capacity as best as you can so you can continue to build properties going forwards, right? Because it doesn't matter how good the properties are, it doesn't matter how much they've grown in value. If the banks turn around and say, sorry, we're not going to lend you any more money, that's it for you. You're not going to be able to build that property portfolio of at least sort of 3 to 5 properties that we believe most people need in order to have that level of passive income coming in so they can retire early or even supplement their income, whatever your personal goals are. All right. And so that's why you'd really want to be looking at properties that give you a growth in both equity and positive cash flow so you can keep adding to these properties. Plus, when you have a property that's giving you positive cash flow and growing as well, right? It's not eating into your lifestyle at all. If anything, and for our clients, we show them how to do this, you can take the positive cash flow from the properties and use it to pay off your personal mortgage faster, right? Or to pay off other debt, or to use it to start an extra savings fund in order to then go and get property number 2, property number 3, all right? So that's why positive cash flow plus capital growth is key, and I just don't see a lot of those opportunities in Melbourne right now. Moving on, look at the Brisbane market. House prices grew by 28.43% last year, but rents also grew by 12.9%. Okay, Adelaide house prices 23.21% growth, and rents grew by 9.8%. Perth 13.06% for the house price market growth, rentals 10.8% growth. Hobart, 28.08% growth in houses, 8.7% growth in rents. Canberra, 24.94% growth in houses, rents grew by 12.5%. Okay, and Darwin, 14.71% growth in the house price, median house prices grew by that much, and rents grew by 9.1%. Okay, so what you can see here, if you look at this table, is essentially if you bought anywhere except in Melbourne, we're focusing here on our capital cities, so if you bought anywhere except Melbourne, you would have done well both from a capital growth perspective and also from a rental perspective. Okay, clearly looking at this, Brisbane and Canberra, probably actually Brisbane would have been the best market to have bought a house in 2021, because when you look at the house price growth and the rental price growth, that's a market that was the clear winner. And that's one of the things that a lot of people don't look at. They don't look at both in comparison. They just look at house price growth and which market's growing the most, right? But remember, property investing, it's a process. Okay, it's not like a lottery event where you just buy one property and you make all of the money that you need to and you're going to retire with that one property. No, you're going to have to build a portfolio, right? And so property investing is a process, and so you need to make sure that you're looking at all the key levers. And here we can see that when you look at getting capital growth plus rental growth, it's going to put you in the best position to build that portfolio faster and reach your income goals or your financial goals faster as well. Okay, but now if we look at the actual house prices themselves and then look at the median rents, we see something quite interesting. In Sydney, again, these are just median prices, right? So, again, markets within markets, different suburbs are going to perform differently. I get that, but we're just looking at the median prices here. So in Sydney, median house price, according to CoreLogic, and I've just rounded these all off to the nearest thousand, was 1.35 million for a median price house in Sydney, right? But the median rent's only $600 a week. In Melbourne, you're just shy of $1 million for the median house price, but the median rent is $445 a week. Whereas in Brisbane, you're at $783,000 median house price, so right, about $200,000 less. But look at the rent. The rent's actually higher at $480 per week, even though your house price is cheaper, right? And over the last 12 months, Brisbane has far outperformed Melbourne. And as you'll see in a second, I expect that Brisbane will actually continue to outperform Melbourne. Okay, so just that, you can see how you can do a lot better by perhaps not spending as much or not going to one of our bigger cities. All right, but you've got Adelaide, $622,000 for the median house price, rents $450, so even that's also higher than Melbourne. Perth, $553,000 for the median house price. Look at the rent, $460. Again, that's higher than Adelaide, even though it's cheaper to get into Perth. Rents are higher than Adelaide and definitely higher than Melbourne as well. Hobart, median house price $747,000. Rent is $500 a week. Canberra, we've now hit well over $1 million, but the rent's only $675 a week. So yes, better than Sydney from a rental return perspective, but some of these smaller markets are going to do much better. And Darwin, median house price $565, median rent $600 per week. Okay, now this doesn't mean that you just go, oh look, Darwin's the best place to invest in because look at that, right? Or I'm going to stay away from a particular city. No, these are just giving you the overall median prices for the house price and for the rent. You're obviously now going to have to go and do your research in terms of, okay, well, if this is the starting point, right? And that's what I'm really aiming to give you here is a bit of a starting point with your research. You can then drill down and look at the individual suburbs, and what you want to be looking for now is, how quickly are prices, how quickly are properties being sold? So what's the time on market? What's infrastructure investment, jobs growth, vacancy rates, all these key factors that we help our clients look at when we're finding properties for them. That's what you need to look at as well, okay? But I want to leave you with one final chart that I think is quite instructive because it will show you which markets are currently growing the fastest, okay? And this data is again from CoreLogic. And so here we have the Australian dwelling values for our capital cities and what's happened in the last quarter, okay? And what you can see here is if you look at this first chart, this chart shows you that there are two cities that have an accelerating rate of price growth, okay? So the green one refers to Brisbane, which is having at the moment the fastest rate of price growth at 8.5%. And the red line is Adelaide at 7.2%. So this is important because if you can buy in a market that's rising in value right now, obviously it's going to give you the best chance of getting a good equity gain, a step up in terms of getting some equity. But also those two markets, as you saw in the previous slides, give you a really strong cash flow as well. So strong price growth combined with strong rental income, that's what we're looking for. Now again, this is not advice. You need to go and do your research, make sure the risk factor is right for you, and then you target the individual suburbs. But it's definitely a great starting point, okay? Because then if you look at some of these other markets, so what have we got here? The dark blue line, this is Sydney. Its rate of price growth was 2.7%. Mind you, this is not for a month, this is for the quarter, okay? So 2.7% for the quarter. Melbourne, 1.5% for the quarter. And then look at some of these other markets. Canberra here is at 4%. Hobart, 4.2%. Darwin, 0.7%. And Perth, 0.4%. Right? So you can see then quite clearly which markets are growing the most right now and their rate of price growth is accelerating, and which markets the rate of price growth is decelerating. Now, just because the rate of price growth is decelerating doesn't mean that those markets are going to crash. No, okay? But certainly if you're looking to enter the market, wouldn't you want to be buying in a market that gives you price growth that's accelerating, not decelerating? Okay, because an accelerating rate of price growth is normally indicative of more price growth coming over a longer period of time. All right, so I really hope this was valuable to you. Hopefully it shows you that, you know, people out there who tell you you can't get positive cash flow and capital growth, look, they're living in the dark ages, right? That's not the case in 2022, all right? It wasn't the case in 2021 either, all right? And so I really think that if you are willing to do your research, use some of these metrics that I've shared with you, and then drill down further, you're going to find some great opportunities where you can get strong capital growth in 2022, combine that with strong positive cash flow, and that's really going to set you up to then get into property number 2, number 3, and build that property portfolio that pays your passive income each and every month. Hi, it's Nero here again, and thanks so much for watching. If you like what you saw and you're looking for a proven recipe, a blueprint on how to build a property portfolio that gives you passive income, then click the link below this video and get a copy of my book, Wake Up Wealthier, How to Build a Property Portfolio that pays you an income each and every month. Okay, when you click the link and you download your book, you can get both the digital version and the audio version in case you don't like reading. All right, so I used to sell this book for $49, but right now I'm making it totally free. Why? Because I want more people to get this information, and I know that a segment of you will then like what you see in the book and choose to reach out to find out more about our services. But even if you don't, if you're serious about building a property portfolio that pays your passive income, then you really want to get my book, Wake Up Wealthier. It contains the secrets that I have fine-tuned over the last 19 years. It's totally free for a limited time. Click the link below.